100% of the time. What exactly happens in second-year presidential cycles? And why could the biggest world's hedge be part of the storyline? With an inverse head and shoulders potentially starting to set up in the US dollar, momentum stocks still running out of control, and the S&P 500 facing one of its biggest correlation periods, this earnings season and what the Federal Reserve may be doing next could matter a lot to all of us as investors and traders. In today's video, we deep dive into what Wall Street is up to right now and why dark pools started to arrive on certain things over the last 24 hours. Guys, there's a lot to get into. Let's cover stocks, commodities, and cryptos together. See you in a moment. Well, welcome back everybody to The Daily Show. My name's Tom, and as always, we'll be going through the latest macro, the big data, and of course, the key flows going on right now. But I think the biggest storyline this week has to be earnings. And as we know, it all is about tech. Will semiconductors hold up? And will we continue to see the Magnificent Seven be some of the strongest sectors of the markets? Well, firstly, let's go through a cautionary tale of what's going on right now in the macro space. And I'm sure by now most of you have heard of what's called the Warren Buffett indicator. This basically takes the total US stock market value, divides it by the annualized GDP, and spits out an overall number. And we're at what we call 220,000. Now, I posted over on X, links in the description down below if you're interested in following us there, that while this is not the holy grail of indicators anymore, we certainly are up there. And at this point, we're starting to get into periods of time which, whether you believe in this indicator or not, have been kind of synonymous with potential market overvaluations. 2022 was a classic. At the end of 21, we moved over this particular level. And of course, we saw the same thing at the start here of 2025. So will it get worse before it gets better? Generally speaking, I would say yes. And of course, that is going to be driven by AI. Predominantly what's happening at the moment is the market is trying to price in how many people can companies actually afford to lay off to start to reduce costs across the board. And this is leading into frenzies in stock markets. In fact, things like Microsoft and of course some of the other Magnificent Seven stocks, Hood, Coin, PLTR and others are rallying out of control. And it kind of makes you think, is this 2021 all over again with huge amounts of calls coming in? Are we seeing mania similar to those periods? Well, I wouldn't really say it's the same type of thing. Although 70% of all options at the moment are written as calls, which of course is an interesting read by itself, we're not quite seeing the same type of thing happening here when it comes to the top 100 stocks with inverted call skews. In 2021, we saw some wild numbers, as you can see up here, but we haven't had that this time in 2025. And I think this is important to note that it seems to be kind of more specific to certain stocks. And while it does show us euphoria as across the board, it doesn't necessarily mean it's the same potential thing. I would say it's like history rhymes more than it is exactly the same as 2021. But where things get really weird is when we start to look at the data for August. Because yes, we're in the actual second presidential cycle here for Donald Trump. And of course, that means that we go into the worst period of the year traditionally when you're taking a look at these second terms. S&P performance in August during the second term of post-election years from the 1950s to current, well, it has a pretty bad stat. Every single one of them has been negative. And it's not just a little negative, it's actually negative to 3.4%. And although you might say, well, this doesn't have to happen again, it certainly is a very interesting read. And you can see here in term twos, how it's tended to lay out compared to term ones. And I think this is because generally you see a lot more reforms and bigger changes in the second presidential cycle. Obviously, you've got the 8 years, you've got the expected, step down at the end kind of thing. And the market knows this. And of course, what happens is you tend to see bigger reforms sent through the markets. And this is a very interesting point here with the August period, because of course, many people are speculating, including us, that sometime in Q3, we should be getting that secondary pullback. If you're new to markets, generally speaking, 2 major pullbacks a year is the expectation. There is the garden variety, which is between 5 and 8% decline. And then there is the bigger variety, which is like a negative 15 to even negative 20%. Now, these ones are way rarer. And of course, we already saw that in 2025. So if we do get a secondary one, between the 5 to 8% seems more likely. And that's interesting because, of course, as we've mentioned, recently calls have been on the up and up. And this is meaning that across the board, people are speculating on continuous gains. In fact, some people are saying the market will never drop again. We've heard that on the channel many, many times over the last couple of years. And of course, whenever the market then drops 10, 15%, those people sell out completely and then they get back in when the market has recovered 15%. So the key is really, do you have the foresight to be able to see this type of thing occurring? So although we shared a stat from 2021 before that shows that maybe we don't have the same level of broad speculation, what we do have is retail activity. So that means that less sophisticated people, although you guys are sophisticated, but not all of us are, if you know what I mean, retail, are in the markets. And over 20% of all the volume and transactions going on right now are actually from us, the retail trader. And the last time we saw that in terms of these big numbers was again 2021. So it just opens up the case for Wall Street potentially being able to kind of pull the rug from underneath us and get us into trouble. And what we're seeing at the same time as this is everybody's upgrading. According to Seth Golden here, it says that progress in trade negotiations will take the S&P 500 S&P to the third consecutive year of plus 20% gains. Now, by the way, that's incredibly rare and very unusual. This means the price target is 7,100. Now, this is according to Oppenheimer's chief strategist, Jonathan, I'm going to mess his last name up, but we'll go with Stoltz or something like that. A feat unseen since the late 1990s. Now, think about that for a moment. A feat unseen since the late 1990s, something where we generally do not see two back-to-back 20% years followed by a third 20% year. It smells of bubble, I've got to say. And the reason why that is because remember, in the late 1990s, anything that had a website was worth $1 billion. You know, pets.com is that classic example if you want to go and research it. And this seems to be the type of thing that's starting to come in creeping into the analyst reports. I've seen 7,700 suddenly. I've seen 7,600 being a classic one. And obviously we see here 7,100 confirmation. So it's not like Wall Street is not upgrading across the board. And remember, even if you don't believe the markets are worth this much, if the price action is currently bullish, which it is at this stage, then you have to realize that markets love climbing the wall of worry. So even if it's detaching from what you believe it's fundamentally worth, that doesn't matter. Now you can see that really kind of demonstrated here in this chart. And what that shows is basically that asset managers have actually been reducing positions recently while the market has actually been driving higher. So you might think, well, the biggest guys probably know what's going on, and some of them certainly do, but a lot are worried about these prices because they don't make sense on some of their metrics. That being said, though, the price action is leading the way and the flows. So we're looking for signs of degradation underneath the hood. Do we have euphoria? Yes. Has this been a good read? Yes, it's been particularly good, except for one bad read, which was here at the beginning of 2024. That was certainly a bad one. But the others have all been pretty consistent. So again, we have consistency here of a lot of macro, a lot of top end stuff saying the markets could fall at any moment, especially August, considering the stats. That being said, just remember, guys, macro does take longer to come through. So it can be months. So we have to see those signs underneath the hood. Let's now talk about global liquidity. Now, that's been a good news story. Global liquidity has been secret, stealthed, increased. We've been talking about this since 2023. And basically, it's not QE in the form of what we call it as QE or what we knew as QE, but it's stealth QE. And that's leading on to euphoria in the debt world. So if you have a look here, the debt increase, like we put into our weekend video, is astronomical here across the board. Now, this is very symptomatic of the end of great runs. And that means that we're probably going into the last innings here for the market. And although we haven't seen the traditional defensives such as healthcare and staples pick up, we are looking for those. If you take the margin debt to percentage of GDP, you can see right here, it's starting to get up there, not quite to where we were in 2021. And generally, the normal rule is that debt must be bigger than any previous market before you can actually get a proper crash. Now, this is a different read to the other one. So the other one has already made a new high. That's the one I traditionally use, along with some other reads that I've got in my advanced course. Again, links in the description for a bit of a plug. But basically speaking, you are looking for debt. Debt, liquidity, these types of things matter a lot to markets. And of course, it's one of the reasons why, we've been able to pick gold and silver and other things, because we knew that these were around And when you have debt increases, when you have prints like we've had in terms of central banks, there is a good case to be made that certain precious metals, certain alternative assets can go very, very nicely. Speaking of alt assets, you may think the S&P 500 is actually incredibly broad and one of the best markets. And that was true for a little while. But actually, since it got revalued back in 18 in terms of tech, you could see if you actually went through, we are now sitting at 40% plus of the S&P 500 as being tech and innovation. And you might say, what's the big deal? Well, that's kind of unusual to see those types of weightings. And tech, if you actually considered it correctly, has become such a huge part of the S&P, which makes sense that if we see rotation out of the Mag 7, it's going to hit everything. On good news stories from around the board, in terms we get to dark pools in just a moment and where we are in terms of the Q3, Bitcoin, Ethereum, and other coins are getting a lot of inflows. Of course, we've seen XRP, Solana broke out recently, and Ethereum may have just started to find topping as we see dark pools come in. Here are a couple of reads. Crypto just had its record inflow for this month. Ethereum saw its second largest week ever, backed up previously by its largest week ever. And 2025 inflows are already bigger than all of 2024. So if you're a crypto fan, you're loving all of the news that you've been hearing recently, because really it just shows the mainstream is coming into crypto. And although they'll probably end up creating it in their own image, as in they'll create their own stable coins and central banked, backed currencies and all sorts of things, to have them in there at least initially is giving a big boost. Now, we saw something interesting here over the last 24 hours, a hell of a lot of trades coming in for Ethereum ETFs. Have a look at these clusters, all around that level price of just below 4K, which is exactly the kind of level that we expect the bigger players to potentially place trades. We can see here clustering all over the top here as the market gets up into those prices. So certainly a couple here of trades coming through, first ones in a while. And I thought I'd just load this Tesla one up just to show that although it got sold, they picked up, probably bought, it's rallied a little bit, and it's right in the middle at this stage. So dark pools can have reactions. We're going to talk about Ethereum later on today's show, but certainly something interesting coming up. What about S&P 500 cycles? Well, we are in the August period. Now, traditionally, round here is usually what we call chop, or in the technical analysis world, we call it a pit. That's a pullback in time. So we generally see declines, followed by rallies, followed by declines, and it tends to be a volatile period of the year. In fact, it's the one point of the year when you tend to see a lot of VIX movement along with that mid-February period. So this is traditionally, and if you remember mid-February, what happened this year, guys, this is traditionally the second dipping point area or period. So these periods here tend to be the most dangerous. These tends to be the best. Remember that sell in May concept everyone talks about? Don't worry about that. That's a bit of a lie. But what we can see is that usually the end of the year is pretty good. The start of the year is not bad until you get into that mid-Feb, and then you've got these two volatile periods. Now, that doesn't mean go out and jump on the VIX. The VIX does price itself accordingly, but it means watch defensives. Defensive stocks, we might see pickups in those. Commodities starting to find a huge rise in comparison to gold price. Potentially they're a bit undervalued that we've talked about in several videos. And we're seeing, of course, a lot of these mining stocks getting rotation into them. But really what's going to matter the most is earnings. And it's going to be these companies here that matter. Effectively, these six are going to be the big ones. We've got two hyper stocks that have been driving this whole hyperactivity. And then, of course, we have Meta, Microsoft, Apple, and Amazon. What happens to these stocks if they are buy the rumors and sell the facts? That is, they drop after the earnings, could drive the markets around. And remember, they're expected to move anywhere from 6 to even 7% on some of them. That's going to be hundreds of billions of dollars. That's a hell of a lot of money moving around. We will do post shows on each and every one of those. So expect some specials on breaking down those 6 businesses in particular. And if you love businesses like we do, then make sure to subscribe and we'll break those ones down with what you need to know. For the S&P, it was a pretty flattish day when we get to this trend line here. And of course, we're pushing this 6,400 narrative. And we're certainly getting up there now with pushing most bears out. So most people that have been short probably getting slaughtered. And as we continue to say, it is a dull market, which means that it's making, kind of a series of higher highs and higher lows. It's accelerating out. Is it overbought? Yes. Is it detached a little bit? Sure, yes. Does that mean you can sell it? Not really. And if you are going to sell it, you have to give it time. And of course, use the right tools, because you could get easily stop loss hunted as markets squeeze higher. And then in a month and a half, it could come back down. But that being said, the market is still up. You've got a high, you've got a low level. And just remember, with the macro side of things, those things are awesome to know from a higher perspective of getting confidence. But timing, you don't exactly know when it's going to make a difference. Remember, news is going to be a catalyst to push price. So we always see news as more of an excuse. And this week has plenty of news to make an excuse. So we just don't know if this is going to be the catalyst just yet. Remember, non-farm payrolls, the jobs numbers come out in the US as well on Friday. S&P 500, 6,400 remains the core wall. You guys can see it here, 6,400, 6,400. We break 6,400, 65 seems to be the next level. And Tesla continues to fight around 320 to 330. So starting to get more into the positive gamma as Elon starts to hype the stock back up, and Nvidia really still trading around that 175 area we've spoken about. It's currently at 176. It is in positive gamma again, so I wouldn't be shorting it. But we have kind of hit our pseudo, at least first take profit target level. So just before we jump into the charts and we look at all the key zones and the lead indicators that we should be watching right now, I want to say a big thank you to the sponsor of today's video, which is Tiger Brokers. Now, as you guys know, we work with Tiger. We've worked with them for quite some time. And I tell you what, check this out. They've been stacking awards recently. They've been winning all the awards in Australia, which is pretty awesome. And they just got a new one from Finder. So it's awesome to see them improving and always listening to customers' feedback, including our own, based on your feedback out there. And of course, getting that into their platform. Now, some of the reasons you may like Tiger Brokers is they have chess sponsorship here in Australia, which is awesome. They allow you to, of course, trade US markets, best markets in the world, guys. And of course, do it in a cheaper way than many others. But I like particularly the ability around earnings season to be able to trade 24/5 with Tiger Trade on certain stocks, access 9,500 plus stocks and ETFs. And of course, if you haven't started to get into the markets, I'm sure you have, if you've been watching this channel, but if you haven't started, this could be a great platform for you. And it's starting to implement that AI investing stuff, especially for fundamentals. So what are you waiting for? Definitely check out Tiger Brokers. And not only did they win one award, but they also came highly commended in many other areas and spaces. So that's awesome. Check them out. Links in the description if you're interested. All right, let's jump into the lead indicators. And of course, we start off here, guys, with the options flow. What's going on in options? Well, it's kind of bottoming out here in terms of that. And of course, you can see here, healthcare has not been beating the SPY just yet. It's been picking up a little bit, but not beating the SPY. So both staples and healthcare, you want to see them on the improve. Utilities usually, however, utilities is a little bit pseudo AI trade. So uranium and micro, nuclear reactor kind of things. But in this case, we do have a market that is possibly starting to show signs of defensive action. Not yet, haven't seen it. RSP versus SPY compared to the Qs dropped the last couple of sessions. So again, no signs of weakness there or breadth change underneath the hood. And technology stocks continue to make higher highs and higher lows. So it's all green, all good for now, guys. If we see a reason, we'll let you know. We have heaps of macro reasons, but we don't have a trigger. We need the trigger. Until we see the trigger, we don't have anything. What about this one? Now, we alluded to at the start of the video that it was interesting to see the world's technically largest hedge, which is the US dollar, starting to find bullishness. And a few of you eagle-eyed investors out there, you guys were looking at this and saying, well, Tom, is this an inverse head and shoulders, man? Is this going to become one? Well, of course, that's a guess, but it's starting to shape up pretty nicely. And of course, 99 will be a breakout level. So if we break that, could we be going back to 101.60? It does look like it proofs pretty well. That is, it takes the head to the shoulder, you extrapolate that out and you get that distance. And it is certainly starting to base off. And we've kind of thought this for a while. When we hit 96, we absolutely said that this should be a turn point or at least consolidation. And what do you guys think in the comments? Is that a turn? And if it is a turn, remember the old adage was that if money flows into the dollar, often that means that stocks may drop. That's not always true, but that was the old adage. And of course, it is a technical hedge against uncertainty, even in today's times. What about gold? Is it still a pennant? Technically, it's holding on, trading around the most traded zone. No signs of bulls coming back into gold just yet as the dollar goes up. And the same thing with silver. You'll see they finished the Monday session with long leg doji, which just basically means it has no idea where it wants to go next. Although I would say the general trend is, of course, bullish. We're looking at demand. We're not quite there yet. So we're looking at that 37.50-ish. So maybe 37.80 zone on silver. We're definitely watching that. And US oil did spike up, but no new updates on that yet. I call it very neutral, even possibly down. Tesla managed to fill the gap almost perfectly. It did fill body to body or wick to wick if you want to go with it. But yeah, we basically have here a neutral style Tesla, I think, in terms of breakouts. And stocks like Hood and Coin and others, well, some were up. Coin has been dropping since hitting that resistance level. So you can see here it's come back down to that daily 20, which is where you're going to want to see the buyers come back in. But there's a lot of stocks that are kind of, they're all at resistances. They're all at levels where they're going to need that next catalyst push. And we've got a special coming up in single stocks tomorrow where we're going to cover each one of these stocks coming into earnings. So, of course, watch out for that. 3 stocks being focused on tomorrow. Metals dropped a little bit over the last 24 hours. They've been on an absolute ramp. And really, I think the chart to maybe watch is semiconductors versus SPY. And that has been a mixed bag in recent sessions. So remember, when semis lead, no problems. We've said that consistently on the way up. And semis are still bullish. But if that changes, we have to know about it, especially if we're still making higher highs on the broad market. Because remember, when tech starts falling over, it's too much of the market. So it ends up bringing everything down for a bit of a pullback. HSI, Chinese markets, still technically bullish. Yes, they've dropped a couple of sessions, but overall, still well up on where we've been talking about it. And NASDAQ's pushing the top end trend line, as you can see here, with a bit of overbought action. And the Russell is still trapped. So it's still kind of floating in that supply action at this point. So no new updates there. Where we did see some action was Ethereum, and it hit 39.50. Now, to me, that's a pretty big level, because if we take a look at Ethereum and we consider it, while I think it may go higher ultimately, this 4K level is a big deal. And you can see it's a big deal. 1, 2, 3 hits. And obviously it's come back to it over here. So if we go back to the weekly, you can see here, it's really struggled with that 4K. If it breaks 4K, 46, 47 could be the next answer. And the trend is up. But it has hit that first resistance, couple of dark pools coming in and big clusters. And Bitcoin is chilling. I mean, that is, I wouldn't be concerned. I mean, there's nothing to be concerned about. It is absolutely stuck in sideways action after a beautiful move. And that's what we call a pit here on the channel, a pullback in time. There's nothing wrong with that. Resetting indicators, nice wick, breaks 125, so 120,500. That could be quite bullish, and it's looking all right. Things to watch this week. So we've got a few things. Of course, you've got all this different news coming out from central banks, but the big one is going to be jobs numbers on Friday at 8:30 a.m. It's the non-farm payrolls, arguably the most important data release other than earnings, of course, of the month. So definitely check that one out. And of course, if you haven't already and you're new to the channel, make sure to subscribe. Follow us on some of the other socials as well. Always great to see you on there, guys. And of course, as well, check out the sponsor of today's video if you want to get a couple of extra specials. If you're an FX Evolution member, check out the description and pin comment, as you can take advantage of some tasty specials if you do open an account and you decide that Tiger Brokers are the one for you. Thanks, guys. We'll see you in the next one. Bye for now. Gotcha.